JSW announced its numbers a short while back. Nigel D'Souza caught up with the management. Here's a slice of that conversation.
No, in this quarter, prices have come down in the domestic market. If you have seen the numbers which have been released by JPC, the production has grown in India, whereas the demand has not grown to the same extent. So there is definitely a surplus, as is in the international market. Globally also the situation is same. There is a glut in supply. Right. Everybody increased the production, whereas demand has not picked up to the same extent. So that had an impact on the domestic prices in the last quarter. Particularly July and August, the prices came down. So when the EBITDA came down from 9,278 rupees in the quarter one to 7,085 rupees, this 2,100 rupees can be attributed, as I mentioned to you, 4% reduction in selling price, which is approximately on a weighted average blended basis is around 1,300 rupees. Balance 800 rupees is accounted by higher cost. In fact, the cost pressure is much more in the last quarter because NMDC increased the prices. And also they introduced a differential pricing for the iron ore being sold in Karnataka. So that had also impacted. But in spite of increase in the iron ore prices, differential prices, plus increase in the coal prices, we could reduce our cost to a certain extent, which neutralized and still showed a margin of 7,085. But instead of looking at 7,085, the way it has to look at the margin is 22.2%. Right. So which was higher year on year. By almost close to 5.5%. Right. So that is a very good achievement considering the current global environment and the cost pressures and the distortions in the prices of steel in various locations and the circumvention of the imports, circumvention of the rules which are happening by way of higher imports. I think these are the factors under which these results have to be analyzed.
Well, Mr. Rao, you know, all our viewers and all of us, we have been quite happy with what the government of India is doing in terms of protection. Now, you're telling me with that protection, we're seeing prices decline. Given that it's a weak quarter, normally because of monsoon factors, tell us what has been the price change if I compare the blended realizations in quarter two, and as of today, what is the change in prices? And also, do you see that scope to pass on some of this increase in input costs?
Today, cost pressure was so high, not only in India, even internationally. Coking coal prices in the last few weeks almost more than tripled, which used to be $80–90 per ton FOB. Now it went up to $55 per ton today. So it is more than tripled. Similarly, the iron ore prices, which $54 I have seen just last week. Now in this week I am seeing 63 plus. So there is a huge amount of cost pressure that is coming in because of hike in iron ore prices and coking coal prices internationally. But in line with the increase in the raw material prices, we have seen in all the three continents, either you take USA or you take China or you take Europe, prices are going up. We have seen a $50 increase in US, $35 increase in China, and a €60 increase in Europe. And the prices are going up, so therefore there is no option if these prices of raw materials remaining at the elevated levels, at least temporarily in the next 1 or 2 quarters, due to disruptions in the Australia because of weather, or curbs which are imposed in China on the mining, because of which the prices may be higher, due to which I expect the steel prices to go up, not only overseas, even in India.
Well, Mr. Rao, you know, could you tell us in terms of imports, is there some slippage somewhere? Because we have this MIP in place, ADD as well on remainder products, but there still seems to be quite a few imports that are coming in. What's your sense of that? Is it coming below the MIP price?
We have analyzed the data, particularly the 66 items where MIP is there. So these 66 items, when we analyze in the first half of this financial year, 32% of the imports which have come in are below the MIP price. So that is a matter of concern. In addition to that, whatever is not covered either MIP or anti-dumping, when we look at where India is capable of producing, there is a huge amount of increase in imports which is happening. For instance, tin plate. There is in fact surplus capacity in India. Similarly, non-grain oriented electrical steel, there is a huge amount of capacity in India which we can produce and supply the entire demand. There is no need for us to import at an unfair price. So therefore, government, we are looking towards where this type of increases in the imports are happening, and at the same time imports coming in below MIP price where there is a trade remedial action. This requires to be relooked or analyzed, evaluated and monitored appropriately. Thereby the domestic industry is not hit.
All right, Mr. Rao, tell us about your financials then. Give us some kind of guidance going ahead. You've reduced your debt by around 1,400 crores for this quarter. Come the end of this fiscal, what should your debt look like? And are you planning on taking more debt? Because there are quite a few steel plants out there, domestically and internationally, that are on the block. What is JSW Steel looking at?
JSW Steel, if we look at first half year, we have made EBITDA of over 6,200 crores, whereas in the entire last year, FY16, we made 6,000 crores EBITDA. So that itself is showing that we are doing far better than the competition as regards to overall financial performance. At the same time, when we announced our results for the last year, we said we will bring down our debt and we'll improve our ratios. In line with that, as on 30th September 2016, our debt has come down over 31st March and also over 30th June. So our debt was 43,900 crores net debt, which is lower by 1,400 crores. Our weighted average cost of debt has come down by 9 basis points. It is 7.59%, our weighted average cost of debt. In addition to that, we wanted to bring it down further going forward by 31st March. Our debt equity and debt to EBITDA have improved significantly, which was 5.69 as on 30th September debt to EBITDA. In this quarter, we have bring it down below 4.8. So similarly, debt to equity 2.15.
Right.
So we are managing our financial ratios and the balance sheet in a manner where we will be able to grow in future much faster than what we have done in this year.
Well, Mr. Rao, you're evading my question then. Yeah, let's be a little more specific then. Are you looking at any of the domestic plants? There are quite a few that are on the block, the likes of Uttam Galva. And international as well, there's Tata Steel in Europe, in Italy as well, a couple of plants that are on the block. Can you confirm or deny that you're looking at any of these plants?
No, JSW Steel, that way, a company which is always look for growth. So we wanted to grow our businesses, both backward, forward integration and also increasing capacities. So we have a goal of 40 million ton. We continue to evaluate internationally and also locally. So therefore, I don't deny that we are not doing any evaluation or due diligence. We continue to do that. But unless it is fitting within our strategy, and it adds value to the shareholders, I don't think we go ahead and just do the transaction just for the purpose of doing it.
So, sir, you can confirm to us that you're evaluating at least one of these three plants that I'm talking about, the domestic plant, the UK plant, as well as the Italian plant?
Italian plant, yes, we are evaluating. Similarly, in India, some of the opportunities that are available, we are evaluating.
All right. And how will you fund these kind of transactions, sir? If you're looking at them, will you be looking to raise some more debt? Could there be an equity issuance?
No, we have already given the guidance that we would like to bring down our debt to equity and debt to EBITDA. So we are keeping that in mind. So therefore, taking into account the performance for the second half of the financial year, if at all any acquisitions are made, so we would keep the financial covenants and accordingly we will structure, if at all any acquisition happens, how it can be done.
All right, Mr. Rao, then finally, congratulations. You have managed to bag at least 5 iron ore mines in the Karnataka auctions. Are you looking for more mines? Are you looking at more backward integration? And give us some kind of timeline. When exactly will this mines, start feeding you all iron ore? You also had acquired a coking coal plant last year, coking coal mine, in last year's auction. When is that scheduled to start?
As far as the coking coal mine is concerned, we have time up to 2019, but the progress which we have made in making it operational is quite satisfactory. So we will be able to do quite ahead of the schedule, maybe 2018 itself, instead of waiting up to 2019.